Alright, what is going on everybody on YouTube? Griffin here coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going, if you're new to the channel and tuning in for the first time, we'd love to have you here for future streams and future uploads. Definitely consider hitting that subscribe button below. Smash the bell icon right beside it. That way you'll be notified every time we go live or upload another video. Of course, we do these streams. We usually do a market update in the middle of the week between Tuesday and Thursday. Today is Thursday, May 28th, almost the end of May already of 2020. And then we also usually do some sort of either live stream as like a teaching lesson, so to speak, or sometimes I'll upload it as a video. We uploaded a video last night. It's more so geared towards very new traders who are new to the Thinkorswim platform. So if you're just new to this platform overall, I definitely suggest you guys check that out. It's in our stock market lesson playlist. And of course, we have over like 300, close to 400 videos now just about the stock market, a whole lot of streams, a whole lot of live stock market streams, all that good stuff. And then every Sunday, of course, Sunday, Monday, whenever the day before the market opens, we also have just a Sunday stock watch where we just come in. You guys just ask me a whole bunch of questions, either about stocks or just questions in general, and I sit here and just give my input on certain stocks, what I am looking for the market for the upcoming week, and that kind of thing. So if you're into that, like I said, subscribe below. We also have a totally free Discord group chat, by the way, which is down in the description box with over 170, 180 members in there now. So we'd love to have you there. It's easy to connect with me on there. I'm in there every single day pretty much talking about the markets. I update you guys on my positions when I'm getting in and out of trades, usually within a few minutes. So yeah, we'd love to have you there. But with that, we will go ahead and get started. I just want to make sure our stream is up and doing all right. Looks like we are in the green. So we will go ahead and just get the video overall started with the markets down a little bit across the board in the after hours trading. Looks like we're down about 0.75% to 1% across the board, with oil really taking us down right now. I expect oil, in all honesty, to retest $31 here in the next week. That's kind of my gut feeling. If it can hold 31, 32, then I think we go on back up to $35 to $40 in the future, by the way. But other than that, we will go ahead and get to the topic of the video, which is just how I managed to, we'll go ahead and open this up for you guys, how I've managed to grow my portfolio over 40% in pretty rapid time, in all honesty. I'm not going to lie, I'm kind of surprised with myself. It's fluctuating a little bit after hours because we have two positions that are still actively trading. We actually sold TQQQ, and we'll go into just those positions because that's part of today's video, just how I get in and out of these trades and all that good stuff. But just to recap a little bit, we did buy back a little bit of TQQQ as well as UDOW in the after hour session, right around $80 and around $62.30 a share of those. Just a very small position because we opened up a SPY bearish call credit spread. It took 314 and 317. With a max loss of about $200 and a max profit of 103. So I definitely like the risk reward in that trade with the June 26 expiration. We always do about a month out, of course. But that's obviously not going to be updating right now, as options obviously only trade during U.S. cash open. So got to take the fluctuation with a little bit of grain of salt. Before opening these trades, essentially we were at about $690 profit year to date. But like I said, it's going to fluctuate a little bit throughout the video as the market goes up and down. And as you can see, we now have over almost $2,700 in the portfolio. And you guys know that I started out whenever we moved our money to Thinkorswim. We've been with Thinkorswim now for about 2 to 3 months. I don't know the exact number. I want to say it's like 9 weeks going on 10. So that's why I just put 2 to 3 months in the thumbnail and all that good stuff, because it's between 2 to 3 months, right around 9 or 10 weeks. How's it going there, Mike B? Glad to see you here. And I know Mike B's been on fire the last few months as well, trading futures. But I do want to be upfront and let you guys know that I did go ahead and invest another $500 into the portfolio recently, just because obviously the more you invest over time, as long as you continue to have profitable trades, your account's going to continue just to explode with that compounding interest on top of putting cash in there. However, that still puts us up after fees and commissions. Our fees and commissions were around $12-13, it looks like. We'll call it 12. Essentially, I think it's 13, but we'll call it $12. So even after fees and commissions, we're still up around $672 year to date over the last 2 to 3 months since we've been on Thinkorswim. However, the $500 we literally just put in there this week, I want to say it was available yesterday, if I remember right, either yesterday or Tuesday. It was available, and we haven't even been trading with that full amount. So we're doing this based on my initial investment, which was $1,500. Starting next week, I will do my calculations based off of $2,000, since I will now have had that $500 available for over a week. So we'll adjust our percentages, and we'll even, for shits and giggles, do the percentage based on $2,000 here in a little bit. But just whenever we take a look at our overall portfolio, we're up. We'll do pre-commission and then we'll do post-commission. It's not going to be a huge difference, but right now we're up $683. And again, it's fluctuating a little bit with these 24-hour ETFs trading still. Divide that by our initial investment of $1,500, and as you can see, it's actually 45 to 46%. So I mean, really, I'm really stoked about that. Of course, like I said, we've been doing this on here for about 9 or 10 weeks now, so right around 4.5 to 5% per week average. And I keep stressing to you guys, it's not that I do not expect this to keep up. The funny thing about that is the more that I keep saying that, the more the average goes up. It was at 4%, then 4.25, 4.5, and now we're up to around 4.5, 5%. But do I expect this to just continue? No. I mean, I'm on a pretty good tear right now. I'm not gonna lie. I've had some really good trades the last week or two go my way. I don't even know the last time I had a loser. I think it was SQQQ about a week or two ago. But we've been on a tear lately. I'm not going to lie about that. I mean, geez, I can't imagine if I keep up 5% a week what the account's going to look like, dropping in another couple $100 a month. But we'll go ahead and do the calculation based on post-commission, since obviously that'd be your quote-unquote net before your taxes and all that stuff, of course. So we'll do 672 divided by your investment of $1,500. It's not going to change a lot. 44.8, so you're talking about a 0.07 or like a 0.07 or 0.7% interest difference, not interest. And again, you divide that by about 9 to 10 weeks. You're still looking at about 4.5 to 5% profit per week average. And again, like I said, we can do it based off of my investment of $2,000, even though, like I said, we haven't even used that money yet. It's only been available for a day or so, but we can go ahead and do the calculation based off that as well. I'm sure that'll definitely mess around with the numbers a little bit. I bet it drops by about 10% probably, but even that'd be awesome. Let's see what that'd be. That'd still be 34% profit over the last 9 weeks. That would still be almost 4% a week, which is still pretty stellar. But like I said, I'm not doing it based off that because I haven't even been trading with that money. Starting next week, I'll probably start calculating based off of that. I might even just wait. Yeah, we'll go ahead and just start it next week, since next week starts a new month anyways. So pretty stoked overall about that. And with that, we'll just kind of go ahead and just dive into kind of just what all has gone on with the portfolio to get us to that point recently. And like I said, I like to check in from time to time, make sure our stream is up and going. Looks like we're all good, all green. And if we ever have any audio or video issues, definitely let me know in the chat. I'm checking that pretty frequently to make sure if you guys have any questions, anything you want me to take a look at, or if there's any issues, definitely let me know. But first and foremost, we'll just kind of take a look just at the day overall. So we closed our position in QQQ. It was a short put spread, so we paid a debit back, but we locked in. We secured, it was around a $23 profit after fees and commissions, around a $20 profit on that position. we sold out of all of our TQQQ, all 32 shares at $82.30. As you can see, we have no. I'm glad I knew that actually, because I almost accidentally placed a day trade at the close. But we did close all of that at $82.30. A little premature, but I'm happy with where we got out. My target was anything above 82. I was hoping for more of like 83 to 85, but I could tell we were hitting quite a bit of resistance above 82. So I was like, you know what, we'll just go ahead and cover this profit. We were up overall on that position. I want to say for the total position, it was like $104 to $106 of profit. And then before the end of the day, as you can see, we placed a SPY, like I mentioned at the beginning of the stream, we placed a call credit spread. So we're pretty much saying that SPY is going to stay below that 314 to 315 level. And that's with a June 26th expiration. Like I said, with options, I love to do roughly about a month out, a minimum of 3 weeks, a maximum of usually about 6 or 7. Just depends on how much credit per capital that like you have to put up. So it'll tell you how much of your account essentially is going to be held as collateral. For this trade, for example, is around $200. I posted the details in our Discord group chat, which of course, like I said, is down in the description below if you're not in there already. But it was around like $200, something like that, and the max profit was around $100 to $105. I think it was like 103 to be exact. But after your fees and commissions, it's about $100 max profit. And of course, when it comes to these credit spreads, I like to cover anywhere between 20 to 60% of the max profit, which is why I almost placed a day trade, but I didn't because I didn't know at the time. I was on the go with work and whatnot. I didn't know if I had any day trades available. I'm glad I did not place that trade, or else that would have got me in a sticky situation. But the trade was up pretty heavily. It was up around $28 actually at the high of the day on that trade. But I was like, you know what, I think this is just more of things to come. I think the market's going to drop a little bit more in the short term, and as it does, we will go ahead and slowly load up on some TQQQ, some UDAO. We'll probably buy a little bit of SPXL, depending on how much it drops as well. We're just going to slowly average in. That's why we only bought 5 shares, pretty small positions here, about $300 to $400 positions, about $600-700 total worth of positions there. And like I said, we'll just kind of slowly average down a couple shares here and there, which is pretty much what we did actually within the TQQQ trade, which we will go over here now and discuss a little bit more. Because like I said, I'm just trying to, I'm being totally transparent with you guys, just like how I do my trading style. So this is from 7 days back. Let's go ahead and do 30. We'll just do kind of a month. Now this is going to get crazy to look at. I don't know if this is updated. Let me see what the difference is. So yeah, okay. So when we go back the last 30 days, and what I want you guys to realize is like, even though there's 95 orders, 97 fills, that does not mean that I did literally like 95, 97 complete trades. That just means either I bought some stock or I sold some stock, bought some options, sold some options. But the key there is it can include buying. And those of you that are in the Discord group chat know, I mean, there's often times where I will buy a stock, a ETF like TQQQ. I will buy into the stock or ETF, whatever I'm trading, sometimes upwards of 3 to 5 times in a day. And we'll take a look at that here. So prime example, look at this right here. This is just the 26th right here. And you can see buy. Like I said, just a couple shares. And I cannot stress enough. You can see here, I bought in at $82. Got in super overpriced. And then I just slowly bought it all the way down. And then we kept buying some more on the 27th. We kept buying a little bit more on the 28th. Even though we popped up quite a bit from that 74 to 78. We bought a little bit more, which was this morning, which is why we had to use our last day trade, all because of two shares. Had I thought about that before selling, I probably would have just held on to 2. But it is what it is, right? And then of course we sold at an average price of 82.30, hence why we have so much profit in there. It has nothing to do really with what we bought early on, and that's what I can't stress enough to you guys. Whenever you're trading, especially more of like swing trading style, this doesn't necessarily apply too much to scalpers. Scalpers, like, you have to be like right on the money, which that's just not my type of style. It is when it comes to futures. I can scalp futures all day, but when it comes to like stocks and ETFs, things that I want to just kind of slowly build my account up with, and I say slowly, but look, we're up 40-50% so far in the last couple of months, so it's not really that slow after all. The thing is you just start out small. I preach this over and over and over. We start out small. This position was only what is 5 times 82? 5 times 82 is going to get us a $410 position on, at the time, was about a $2,000 account. So we still had close to $1,600, if not more, $1,600 available to buy more if it continued to fall. Now, what I do not suggest usually doing, which is what I actually did with this trade, just because I was all in on the NASDAQ. I saw the NASDAQ, and I was actually raising hell in our Discord group chat all week about how the NASDAQ has just massively underperformed the markets so far this week. And then, shocker, it popped up today. I think is actually the best performer earlier on in the trading session. But with that, it gave me just a whole bunch of reason, essentially, by looking at the charts and just realizing how undervalued the technology sector was so far this week. I just continued to dive money into it, which that's the option you give yourself whenever you start small, you buy a little more. I mean, you can see I was buying like one share, and that's the beauty of now that pretty much every single broker's gone to zero commissions, at least in terms of buying stocks. Obviously, with options and futures, a lot of these platforms still charge commissions, but that's a different topic for a different day, which we can talk about with the option trade here in a minute. But that's the beauty of buying these stocks with zero commissions, is pretty much as soon as you're up 50 cents to $1, I mean, like, you're in the green. You can literally, I mean, yeah, you still have your taxes you want to set aside, usually ballpark 25-30%, because you're going to pay pretty much your income tax rate on short-term trades. I don't know, sometimes there's tax loopholes with ETFs. I know there is with futures. I'm not a tax guru or anything. I definitely suggest you guys sit down with an accountant when doing that. Just something else to keep in mind when it comes to trading and investing and all that good stuff. But yeah, this is pretty much a classic deal that we do. We start out small and then we just average in. Now, this is not the type of trade that happens every day. I don't even know the last time I've had 32 shares of a position outside of something as small as SQQQ, which was only about $10 a share. When it comes to something that is like $70, $80, $90 a share, I don't think ever really traded more than like 20 shares at a time. But like I said, I was so all in on this TQQQ position, and I knew there was a 90% chance that this was going to go up today, even if it was a short-term trade, which is what it ended up being. Like I said, we spotted the resistance around 82 to 82.50, so we went ahead and just covered that profit and moved on. And that's what is so critical as well. For those of you that are newer just to trading, I cannot stress enough, whenever you start to feel, when your gut starts to tell you, you know what, we could be leaving some profits on the table, but we seem to be running into a little bit of resistance, which I didn't even notice. This thing actually went up over 83, so I could have got another $32 of profit. But say that I had held that too long and thought, wow, I thought this was a resistance back here, let's see and wait if it acts as a support now, and then I ended up holding till the close. I would have been kicking myself if I had caught FOMO and then ended up holding till the close, because then my position would have been down. My average price per share was $79 going into the day. So I would have ended up down now on the position had I held into the close and into after hours trading. So I cannot stress enough, if you are up on a position and you spot a little bit of resistance, go ahead and sell the position. I think we sold it somewhere in here. We were trading kind of sideways, and I was like, you know what? I just don't want to risk it. I'm going to go ahead and cover the trade and move on. What was it again? Was it 81.20 or 82? It was 82, wasn't it? 82.30. Yeah. So yeah, that was right around when we sold it, was when we were hitting a major, just stalling out for a little bit. And had I held another hour, I could have got about another $1 per share, but it's $32. Is that $32 a profit worth risking what was over $105 a profit already? No, absolutely not. So never, ever, ever be afraid to take profits off the table at the end of the day. And that kind of goes in, or it doesn't really kind of go into just my next point about how I've managed to have these profits so far the last couple months. But like you can see when we go back to my trades, you can see a lot of this is ETF, leverage ETF. We got a couple of credit spreads, put and call credit spreads, which if you're fairly new to options and whatnot, the whole thing with a credit spread, so let's use this one for example. It's a call credit spread of 315 to 310. So what that is essentially is you're going to be collecting a credit. As you can see here, our credit was 104, which is $104. So you're going to be collecting a credit of $104 to hold on to this trade with your expiration of June 22nd in this example. And in this trade, I was saying on May 20th, I was like, you know what, I don't see SPY going above 310, or in that case, your break even's right around like 310.20, something like that. But we'll just say 310 to keep it simple. We're saying that we're predicting SPY to stay below 310. Not necessarily by June 22nd. We don't want to hold that long, but if we do have to for some reason, which has never, ever, 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 ever happened in my time trading options, but if, heaven forbid, something like that happened, you weren't able to roll the position or something for whatever crazy reason, like I said, it would never happen, but you're pretty much saying that I'm expecting SPY to stay below 310 by then. Now, this is a bearish call, essentially. So what you're saying is you know what, SPY has come a long way, I'm expecting a pullback. And when it pulls back, that's where you make your money. So if we go back to, I'm not going to go back to 520 because we have pretty much the same type of position put on here at 314, 317. So like right now, like I said, I placed this about an hour or two before the market closed. If we go and take a look back at SPY, you can see here, I bought it right around the high of the day. It was like around 306.60, something like that when I placed the trade. And like I said, it was actually up like ridiculous, like $20, $30, 25 to 30 bucks by the end of the day. But don't have no day trades available, so I'm going to cover it. But I pretty much spotted out, and I was like, you know what, the market overall seems to be kind of seesawing at the moment. I would not be surprised. I was kind of surprised at our drop off at the end of the day. Then I heard what Trump did and what he's going to be doing tomorrow, and I was like, this makes sense. I bet we probably sell into Friday as well, which is why I placed that position. And what went into that decision was just looking at the hourly chart. It's not that we were necessarily overbought or anything, but I did notice that, boom, we came right along that upper Bollinger Band, and we got rejected at it once. And I was like, it was kind of risky because just because you get rejected once at it doesn't mean you're going to just fall. A lot of times you can get rejected and then break through, and then you bust to the upside. But that didn't happen, so we went ahead and got into that trade, and then obviously wrote it down. Now we are riding right along it right now on the lower end of the Bollinger Band, so we could see some sort of a rally maybe overnight, but we're assuming that doesn't happen, obviously, with that trade. But that is the same reason why we went ahead, which also goes into the next aspect of how I trade, which is why we went ahead and placed our position within U down S and TQQQ. That way, if the market decides for some reason to reverse on us overnight and go into rally mode, we will have that there kind of as a hedge. We're not going to close the SPY position. That's another rule, that's the whole point of buying yourself that time with a late June, a 1 month expiration. Even if the trade at first doesn't necessarily work in your favor, which we're up. We're already up 16, which I think is wrong, by the way, because it just showed like an hour ago $22. So that's kind of sketch for some reason. But either way, we're up $16. If the market decides to rally going into tomorrow, we'd probably be break even on this position. And then these positions would actually be up a little bit as well. So we'd actually still be in the profit overall on the day. So it's just working out those quirks with you don't want to be necessarily overweight into something, especially when right now I am very on edge right now about what I think the market's going to do. I have been for the last week or so now. But we just keep slowly going up. We just keep taking these staircases up. But as we know, it's a staircase up, elevator down usually. And I'm trying to position myself where I can make money in either environment, essentially. If we decide to go ahead and roll over here, whatever, I'll make money on that SPY position. I'll make a quick 40 to 80 whatever amount of dollars that I can cover on that position. If we go up, then I can still make a little bit more money on the upside as well. And as long as SPY doesn't shoot all the way up to 314, which I don't see happening anytime too soon personally, then we'll still make money on that trade over the next week or so. These vertical spreads I just tend to use more as just kind of, you can see I don't do them like on a day-to-day basis. We tend to hold these for a little bit of time. We can see here, where was that one at so we had a QQQ. It's funny I say that because that SPY one I held for one day. But we had our QQQ one, which is the one we actually closed today. We bought that on the 21st. We sold it a week later on the 28th. So, I mean, that trade lasted a week. But it was around like 20% profit, something like that. So, a good trade there. Let's see. Let's try to find another one. Our SPY one here as well. Was that the one that I was just talking about? 18th. That one was also a day. There are some that just happen to work out great overnight. Who knows? Maybe the SPY one for tomorrow might even work out overnight, and I might end up selling it tomorrow if the market falls. But I mean, you can see, guys, I don't do these really too often. We had one also back in April on the 29th. We sold it. That was the next day one as well. So, I mean, it just depends. If the trade works out perfectly in our hands, you can see, I mean, we only have, is Apple literally the only trade that we did there. And you can see we got out with a very small profit. But like I said, guys, this is very, very, very heavy on leverage ETFs. And then you sprinkle in a couple of those vertical spreads. And the main thing, if you're wondering, well, how do I decide when to get into a vertical spread? Like I said, I just kind of take a look at the overall. I look at the 1 hour and 4 hour chart when it comes to vertical spreads, because I'm looking for more of, at the minimum, as you've seen, an overnight play. Usually I want to look out for a few days on that trade and let myself collect the theta, because theta works in your favor whenever you're collecting the credit. Say theta is 3, then you're going to be collecting 3, what would it be like? $3 or something like that, whatever, for every day that you're holding that option. And the theta is going to increase, of course, the closer you get to expiration. So we tend to want to hold these a bare minimum of a day or two usually. And as you can see with that one that we held for a little bit, it was about a week. So when we're looking at that, we look at the 1 hour chart and the 4 hour chart. I'll tell you, the 1 hour chart was not what caused me to get into the SPY trade, though, like I said, we did see that, okay, we're seeing some resistance at that upper Bollinger Band. We could break either way. I was like, we got a little bit more room to run by all means if we want to. We could definitely have some sort of upward movement like we see time and time again. But then I looked at the 4 hour chart and I was like, you know what, in my opinion, just looking back at this time frame, for example, I was like, in my opinion, bump, fall. Another similar situation was kind of right in here. We went oversold there, so take that with a grain of salt, but we did have a fall. Then we bumped up a little bit more, fall. I mean, just little falls here and there. And you can see here, I mean, we have been bumping right along overbought on the 4 hour chart for almost 2 weeks now, just kind of riding right along. We've had just enough of pullbacks recently to cool off that indicator a little bit, the RSI. But when I was looking at it, I was just like, I don't know. My gut and just what I'm seeing on the indicators kind of made me believe that we're going to see some sort of a pullback. I was predicting somewhere around 300 was where we would pull back. If we do, we're at about 302.50 right now, it looks like, on the bid-ask spread. If we can drop another dollar or two, that'll be beautiful for my position. I'll go ahead and close it tomorrow. But that's pretty much just kind of what I look at. I look at just what are we looking like overall on our more, I wouldn't necessarily call it a long term. The 4-hour chart is more of a longer term perspective, of course. I mean, you're going back 180 days. You're talking 4-hour chunks, which is literally like, obviously in a 4-hour chunk, you're only going to have 6 candles per day. So you're definitely looking more of long term for sure, or a longer, shorter term perspective, if that makes sense. But yeah, that's how I place the vertical spreads as well. And I mean, like I said, we can go over here and you see, I mean, they make money. Some of them not as much as others. This one we got in at 107. We sold it back at 93, so that was just $14 after fees and commissions, $12. Let me see if we can find the other ones here. And we took a break from them for a while. We did this one at 91. That's another thing. I like my credits to be right around $100 at least. That way I know, okay, $100, I want to get at the minimum $25, $30. With that position, my very first one down here, I didn't really know. You can see like I did around $100 still, but with that trade, I didn't really know how it was going to go, so I just went ahead and covered it. Don't get me wrong, like if you have profit, like I said, take it off the table. But my initial goal is, you know what, going into this vertical spread, I want to get $25 to $50 because that would be, in theory, like a 20 to 40% in most cases of profit. Like that trade from today, it was around a 20 to 22% profit. Where's the next one at? This one up here, $91. And we sold it also at about $16 profit. We paid $75 debit, which is a $16 difference after fees and commissions. Also just another little $13, $14 trade. Another one here, 104. Sold it at 93. That was just about $11, $8 to $10 fees and commissions. Let's see. Or no, did I do that wrong? Debit. Is this? Yeah, this is a different trade. My fault. Or no, yeah, that was $11. Okay, I lost myself for a minute. The next trade was $86, the QQQ, which I'm not gonna lie, wasn't like a great trade position. I should have found a better spread. I should have spread it out probably by one more dollar, somewhere around $4 on the strike. So I should have did like 224 here. That would have increased it probably to like $100 or so. But either way, 86, locked it in at 62. So what was that? $24 after fees and commissions. Like I said, around $22, $23 of profit. So again, it just all starts. It's not like I'm getting slam dunks, $100, $500 with those lottery tickets where you just buy calls, buy puts, and hope for the best. With this, you're kind of buying time a little bit, and as long as the stock doesn't just move crazy in the opposite direction that you need it to, you're going to make money more times than not. The potential for profit on these trades is usually somewhere around 70% or even a little bit more in some cases. A lot of times it's closer to 75%. But usually right around 70% is that sweet spot, and I will take a 70% over 30 to 20, sometimes even less. Just take a look at those naked calls, naked puts, where you're just simply buying a put, buying a call. It does cost you less. You can get those for as little as $5, $10, but I mean, when you're paying that little for an investment, it's like buying a penny stock, guys. I mean, your chance for profit is going to be so small that you're essentially just buying a scratcher. You're buying a lottery ticket, and you can't really expect. You might have a few winners here and there. I mean, that's how I actually got introduced to options, was just simply buying calls and buying puts. But my account was up and down, and I ended up actually almost blowing up my account about a year or so ago, about a year and a half ago now. Still early on in my trading career, just learning at the end of the day. So, like I said, I mean, like everything at this channel, I just want you guys, especially newer traders, newer option traders, that kind of thing, but just newer traders in general, just to learn from my own mistakes. Go back through all those videos and just see the mistakes that I made. There was a couple videos where, I'm not even gonna lie, back then I was giving like straight up bad advice, and I'm going back into the comments telling people like, no, I do not do this anymore. I would not suggest doing this anymore. And I made it crystal clear. I probably should just go ahead and delete a couple videos in all honesty, but it's just like, I like to document everything. That way you guys can just see where I was, see where I am now, and just continue to see like how I learn from every trade that I do. I learn something from almost every single trade that I do, and it's cliche to say like I learn more from every loser than winner. I'm not going to try to say that because I don't find that true. If you can't find little failures within your winners and find things to build on with those winners, then you're not really going to grow as a trader. If you only learn from the losses, you're kind of capping your learning abilities, because after a certain amount of learning, you're not going to fail as often. So you got to start to kind of nitpick, okay, this was a good trade, but how could it have been better? What did I why did I get out here versus getting out there? You don't want to be too critical, but at the same time, you just got to have those critical thinking skills and not just get complacent, I guess, if that makes sense. And I guess just lastly, the one thing I want to hit on very, very hard is you do not have to, there's this idea on the internet and on YouTube that like to be a successful trader, you have to literally like have the best setup, have like 50 screens, and just be able to sit here 24/7. I'm not gonna lie, I keep up with the markets on almost a minute by minute basis, but I mostly just use this guy. Matter of fact, I trade more from this than I do on my laptop. I rarely trade from my laptop, in all honesty. Most of what I do is on my phone, and the thing is I'm trying to work smarter, not harder. Like I said, you can see this is 30 days. We have 95 total orders. Again, you can see most of this is buying. Just simply, I mean, look at how many buys compared to sells. I mean, I'm not really day trading. I'm more swing trading. I've used all 3 of my day trades or whatever. I do have day trades usually, as you can see, 1 to 3 a week like most people. But, I mean, I'm not sitting here like day trading, scalping, doing that kind of thing. I am buying, and then whenever it comes up, I go ahead and sell. I do lots of research into whatever I'm buying. I make sure I'm getting in at what I feel is a good price, knowing that, you know, just because I think I'm in at a good price doesn't mean it's not going to fall more, which goes into that concept again of start low and buy your way up, or buy your way down. I mean, buy your way down. I don't like dollar cost averaging. I thought about doing it on my account, and what dollar cost averaging, of course, is where, like, say you buy 5 shares, the position goes up from, say, $80 to $84. Okay, you're up $20, but say it falls to $82. Well, you're still up on that position. You're up like $10 or whatever. A lot of people are with dollar cost average there. Me, I do not. If I'm up on the position, I'm not buying anymore. As a matter of fact, I'm probably going to sell and then look to re-enter. I do not like the idea of dollar cost averaging. That's for retirement portfolios. That is not, in my opinion, for traders. But I go into every trade knowing that, okay, I'm getting in at a pretty decent price. There's a good chance that I'm not getting in at the perfect time. Rarely ever are you going to get in something at the perfect time. It does happen from time to time, like my call credit spread that we got placed right now. But it doesn't happen on a day-to-day basis. So you start small. I will repeat that until YouTube shuts me down or something. But you start small, and then you just average down into that position, and then you ride that sucker up. I mean, Exhibit A is that position. We started out at $82. Imagine if I had went all in 30 to 35, what I have, 32 shares. Imagine if I went all in 32 shares at $82. I sold at $82.30. That would only be a 30-cent profit times 32 shares. I'm looking at $9 or $10 of profit. But because I was patient and I averaged down a little bit more, a little bit more, all the way down, and then I wrote it back up. And you can see, I mean, there's not like a precise number that I use. I mean, we got 5, 2, 1, 2, 4, 5. It's just I go based off of what the indicators are showing me whenever I'm buying into it. Like here, when I'm buying 1 or 2, I'm kind of on edge. I'm like, we could fall a little bit more, but we're down a little, so I'm going to go ahead and average down. And I average down. And then I'm like, all right, we're starting to get ridiculous right here around these levels. I'm going to buy some more. And then around 77 to 74, I'm like, hey, you know what? I don't want to put too much more into this position because I knew I was going way too much in on this position. I only had like a couple $100 left to invest once I finally got to where I said I'm not buying anymore. But you can see, I mean, I averaged it all the way down. All the way. I mean, TQQQ. Get it pulled up here. We'll just pull up the 5-day, 15-minute. No flexible grid. Go back here. So we started on the 26th, and that went through the 28th on the buying. So again, we bought on a dip at the open, and we just averaged down some more, bought some more just off the lows, rode it up, held out, rode it up some more, and then obviously we sold it all today. I was very, you can ask our guys in Discord, I was kind of starting to get a little bit pissed off this morning whenever it was dipping. We were down about, I want to say 0.8% in the pre-market, and then shocker, we had the unemployment numbers, which boosted us up for whatever reason. Bad news is good news in the market sometimes, like it's been lately, and that, along with a few other things, catapulted us on up. Had a perfect little, I wouldn't necessarily call it a double bottom, but this is definitely a little bullish move that we had here. However, it did get rejected, which is kind of bearish because we did not take out the recent high of $85. We didn't even come close to $85 actually, so that is slightly bearish. In all honesty, I plan on buying more of this around, if 77 to 78 can hold, I may buy a little bit more, maybe like another 5 shares or something. But I would not be surprised, in all honesty. What I'm starting to look at now is we could see this thing definitely retest $68 to $70 before all said and done. We are still in a very choppy range. We've been going to the upside lately, but I think in all honesty, all we're doing is falling right back into this range, unfortunately. The fact that this fell down to like $72, $73 yesterday was not a good sign, in my opinion, and we could not take out the recent high today from a couple days ago, so I think we are going to fall back into this range personally. But that's why I bought a very, very, very small position, because in case if I'm wrong, I'll make some money on that upside, but that's just me. So that is pretty much it for the video. I don't want to make this too long. We got 4 of you tuning in. We've already been on for 45 minutes. So yeah, man, I know we covered a lot here. If you're just tuning in, or if you're new to the channel or anything, like I said, we'd love to have you here for the future streams. Hit that subscribe button below. Hit the bell icon right beside it. That way you won't miss any of these live streams or uploads. And just to recap, again, we'll just go back and take a look at the portfolio. Like I said, it's fluctuating a little bit after hours, not too much, but a little bit. And we're up about $684 so far year to date, but really over the last 2 to 3 months, about 9 to 10 weeks, divided by $1,500 is our initial investment. And like I said, we did just put $500 in this week. It's only been available for like a day or two, so we're not including that. We will start including that in June whenever we're calculating our profits so far. But as of now, we're up over 40%. I should have titled the video 45 apparently, but 45.5% so far, divided by 9 to 10 weeks. We're up between like 48 to 50%. or 48 to 50%, 4.5 to 5% week over week since hopping on TD Ameritrade Thinkorswim. So definitely like what I'm seeing from the portfolio. I'm definitely gaining a little bit of steam, gaining confidence in my trades and whatnot, and I really like what I got going on here. So yeah, like I said, if you're just tuning in, I definitely suggest you go back and you can just kind of fast forward every couple minutes if you want, because if I go over subjects for a couple minutes at a time, so if you see a subject you don't really need to hear or listen to, then just fast forward about a minute or two. We'll be jumping into something else usually. And that is pretty much it. So like I said, we'd love to have you here. We'd love to have you in our Discord group chat if you're new to the channel. Like I said, hit that subscribe button, hit the bell icon, click the link down below. It's totally free to join that. We'd love to have you in there. It's the easiest way to connect with me on a day-to-day basis. And we have close to 200 members, about 180 or so in there at the moment. And we'd love to add you to that awesome community. But until next time, guys, keep on going out there, making your profits, covering your profits, achieving your financial freedom this year. And I will see you guys in the next stream, which will be, of course, our Sunday Stock Talk that we have every Sunday. But until then, take it easy, guys.